Hello, everybody, and welcome back. And much like this crazy weather, the Reno-Sparks real estate market has been unpredictable, to say the least. So if you're thinking about selling or buying a home in the near future, stay tuned. We're going to give you all the stats, data, and trends you need to make the best decision for your real estate needs. Now, before we get into that, this is intended or is a overview of the Reno-Sparks area only. It's the metro area. It does not include Fernley, Fallon, Carson, Dayton, Minden, Gardnerville. But if you do have a home out in that area and you would like information on those outer areas, send us an email, give us a phone call, put it in the comments below. We'd be happy to get you all the state stats and data for those communities. Now, this is for single-family residential properties only, meaning condos and houses. Doesn't include commercial properties or lots and land and agricultural business opportunities, anything like that. So it's just single-family residential properties. Now, this is going to be a 30,000-foot sort of general overview to give you the trends and where things are headed in our market. However, if you have a specific home that you're selling or maybe thinking about buying, you can come over to our website here at forrenohomes.com. You can click on this button now. It says, want to know your home value is today. Just click on the Find Out Now button, enter your address, and we'll give you a really good range on where your home may sell. We'll also follow it up with more detailed information so you have a really good idea of what to expect when your home sells or what you should be paying to purchase a property. Oh, and by the way, we promise we're not going to spam you and call you and drive you nuts. It's just really good, solid information we want to get in the hands of our neighbors just like you. So the first thing we look at every time we do a market update is mortgage rates. Why is that? Because mortgage rates have the biggest impact on prices. Why? Because, well, obviously when you go to purchase a house, over 80% of people that purchase homes get a mortgage. So mortgages and affordability of mortgages help, or I guess, push the market, if you will. So as you can see, we've been in a downward trend, or we're in a downward trend from about 2008 or 9. We, of course, had the Great Recession, and we've been really in a downward trend for interest rates for a period of roughly 12, 14 years. We saw interest rates drop from, well above 6.5, maybe touching 7, to all the way down, as you probably remember a few years back during COVID, to well under 3%. We're seeing the biggest reversal in interest rates really in the history of mortgage rates. We went from below 3 to basically 7 in a matter of 4 or 5 months. It was craziness. Just shot up like a hockey stick. We're starting to see a bit of relief, but it is starting to pop back up again. We hit the 7s, dropped back down to just a little over low 6s, and now we're sitting at mid to upper 6s once again. And why is this important? Because, well, a lot of people hear the stories, oh, all these people are coming over from California and other states, and they're bringing fistfuls of cash and everything's selling for cash, so mortgage rates and interest rates don't matter. I've heard those stories and those narratives before, but it's simply misinformed or not true, because here are the true stats. These are homes that sold and closed with cash offers, full cash. Now let's look at the median home price, which seems to get all the headlines. Right now we're sitting exactly the same as we were last month at $515,000. Now, just a quick explanation on these charts. So when it says prior period, that would be the prior month, January 2023. And when it says same prior year, well, that's clearly February of 2022. So that'll give you some idea of how these charts are laid out. So we're the same as last month at 515, but we're down 6.4% from the same period last year. Let's look at active inventory. Now, just a real quick, this is the number of homes that are on the market. They may have been put on the market or listed for sale this month, last month, 3, 4, 5, 6 months ago. So this is just the number of homes that are available for sale today. So I could go out and look at and potentially write an offer and purchase these homes. It's 629 as of the end of February, which is down over 20% from last month and up 75+% from a year ago. Let's look at the active by price. So these are the number of homes in each price range. Now, if you look at the bottom of all these charts, you'll see price ranges from 1 to 2, 2 to 3, 300 to 400, 4 to 5, etc. So the majority of inventory, which makes sense, is between 4 and 5, all the way up to $1 million. Now let's look at new listings. You may be saying, well, wait a minute, what's the difference between new and active? Well, these are just listings that came on the market in February. So this gives you just a general number of listings taken, not how many are still sitting on the market or may have sold in the month of February. And as you can see, usually in early part, January going into February, March, April is when we start to see listings really start to come onto the market. As you can see that here, you got January, February, March, April, May. We normally see inventory peak out somewhere between April, May, and maybe June. That's when the majority of homes are on the market. And then we see sales usually follow suit, which I'll show you here in just a moment. But you can see the fluctuations. Early in the year, list, everything sells, and we start to see them fall off to the end of the year. List, sell, fall off. We're starting to see that trend here, and we're starting to see things pick up, which is a good sign. Would like to see this number all the way up into probably the 450, 500 plus range by now. So we'll keep a close eye on that in March, April, into May. But we have 337 new listings, up 13%, where we had 298 last month, and we had 532 a year ago, so we're down 36%. Now, new listings by price range is interesting. You see we're not taking a whole lot of new listings in the $1.5 million plus, million to million. Majority of listings are between 4 and 5, 5 to 6. Now, these are closed sales. These are the houses that close escrow that actually changed hands and sold in the month of February, which is 304. That's up 18% from last month, which was also very slow, but down 29% from a year ago. Where it gets really interesting is number of closed sales by price range. You can see the majority of the sales are under 750, and I would say they're probably under 700, all the way down to about 300, 400. So the majority of sales are right in here. When you get above, say, 700, 750 and above, things really start to slow down. Let's look at supply. This is simply a measure of how many homes we have on the market and how much of a supply we have in order to sell them through. So for example, let's say you had 1,000 homes on the market and you're selling 500 a month, you would have 2 months of inventory. So if you didn't list another house, it would take you 2 months to sell through what you have. So this is just a good sort of macro indicator on, are we in a seller's market, a buyer's market, or more of a stable market? Now, if you look, a stable market for Reno over the last decade, Reno-Sparks area, Northern Nevada, over the last decade or so, has really been the 2 to 3.5 range. So right now we're sitting at 2.1 months, which is down 32% from last month, but up 146+% from the same time last year. Now, where the story gets very interesting is if you look at the supply of homes by price range, and look at it at $1.5 million plus. There's over a year inventory. So if you're looking at buying in the $1.5 million plus price range, it's a good time. There's plenty to choose from. You can probably get some concessions. You can offer lower amounts, and you'll probably get great value. Same is true even for $1 million to $1.5 million. And you would argue maybe even 750 to $1 million, although that's dropping down below the 5-month mark. But what I want to show you here is look at the number of months of inventory. Anything really under 650, 700 and under, it's less than 2 months, right? It's less than 2 months inventory. So, that 2.1 number is pretty misleading because it's factoring in the total inventory. Very little inventory, so it becomes a story of price ranges here locally, in that if you're thinking about selling in what would be considered a lower price range at 350, 400 to say 650, 700 in that range, chances are you're probably still going to sell relatively quickly. There's going to be a lot of interest from buyers because that's where people are buying. However, if you're buying, again, it's going to be potentially challenging because we're seeing inventory levels that haven't rebounded totally yet, so there's not a lot to choose from. So as I mentioned before, if you have any questions, if we can be of any assistance in getting you the value of your home, don't hesitate to reach out. You can reach us over at forrenohomes.com, or we'll sell your home for only 1%. There's absolutely no reason to pay huge real estate commissions. As the market starts to change and potentially soften, you need to find better options of selling your home and putting more money back in your pocket. That's exactly what we do at Assist to Sell. Fully licensed, been in the area since 1987, have literally sold thousands of homes and saved local homeowners just like you millions of dollars in commissions. So give us a call, visit our website. We look forward to talking to you next time here on the Reno-Sparks Real Estate Market Update. Have a great March. Talk to you all real soon. Bye-bye.
Assist to Sell, way smarter.